St. Louis Fed President James Bullard out with a speech speaking in D.C. saying monetary policy cannot react day to day to all the give and take around trade and tariffs. Additional policy action, he said, could be desirable, but you've got some other policy action already in the wings and waiting to see how that impacts the economy. Points out that policy now is substantially or considerably more accommodative than it was this time last year. The direct effects of trade, he says, trade restrictions on the U.S., he believes to be relatively small. In an earlier interview, Kelly, Jim Bullard said that he could still support another quarter point, but sounds maybe a little less aggressive than that chart you put up there to remind people what it was. 74% for 25 base point cut in September, another 73 for December. And they're kind of toying with whether or not there's another one come January, 48% probability in January, according to our Thomson Reuters probabilities there.
Steve, as you said, he sounds maybe a little bit more reluctant than markets are pricing in right now. But I don't see any adverse reaction. I mean, the Dow's kind of hanging exactly where it was before these comments hit. And, of course, we've had all day to digest his earlier remarks, and the market has stayed positive.
That's true, and I just think it's one of those cases where the market is more certain about where the Fed's going to be than the Fed is right now. I think that's the case. I think that's important because the market had overdone it a little bit. Remember, we dialed back 50 from July, and then the Fed chairman came forward and said, you know what, this is a mid-cycle adjustment, not the beginning of an easing cycle, and the market had to back off when it said that. So I don't know that it's learning whether or not how far to get over its skis on these issues here.